If you're receiving Social Security, or will be soon, January 2026 just changed everything. You get a 2.8% raise, but hidden adjustments to Medicare premiums, earnings limits, and taxes could wipe out much of that gain, or even cost you money if you're not prepared. Stick with me for the next few minutes. I'll break down exactly what changed, what it means for your check, and the 3 simple moves you can make right now to come out ahead. Before we dive in, this video is for general information and entertainment purposes only. It's not personalized financial, tax, or legal advice. Rules can vary by your situation, and they change often. Always consult a qualified accountant, financial advisor, or the Social Security Administration before making decisions. Investing and planning involve risk, no guarantees. Let's start with the headline everyone's talking about: the Cost of Living Adjustment, or COLA. For 2026, Social Security benefits increased by 2.8%. That's higher than the 2.5% in 2025. For the average retiree getting about $2,015 a month in 2025, that means roughly $56 more per month starting in January 2026, bringing the average check to around $2,071. Couples could see nearly $90 extra combined. Sounds good, but here's where it gets real. The biggest offset? Medicare Part B premiums, the ones most retirees pay for doctor visits and outpatient care. In 2026, the standard monthly premium rises to $202.90. That's up $17.90 from $185 in 2025, a 9.7% increase. Your annual Part B deductible also goes up to $283 from $257, an extra $26 out of pocket before coverage kicks in. For many, that premium hike eats more than half the COLA gain. If you're on a fixed income, this one change alone can feel like the raise never happened. Higher income folks, watch out for IRMAA surcharges. Premiums can jump to $284 to $690, depending on your 2024 tax return. Plan ahead. Planning to work while collecting? The rules got friendlier, but only slightly. If you're under full retirement age all year in 2026, the earnings limit is now $24,480 per year, up from $23,400 in 2025. Earn over that. Social Security withholds $1 for every $2 above the limit. If you reach full retirement age in 2026, the limit jumps to $65,160. And they only withhold $1 for every $3 over that amount until the month you hit FRA. After FRA, no limit at all. Earn as much as you want with no reductions. Good news for part-timers, but if you're close to the edge, track your income carefully. The withheld amounts get recalculated and returned later, but cash flow matters. Taxes didn't stand still either. The maximum earnings subject to Social Security tax, the wage base, rose to $184,500 in 2026 from $176,100, so higher earners pay a bit more payroll tax. On the bright side, a newish senior deduction continues, up to $6,000 extra standard deduction for those 65 plus, phases out at higher incomes. This can lower your taxable income and possibly reduce how much of your Social Security is taxed. Bottom line, the net gain from the 2.8% COLA varies widely depending on your health costs, work status, and tax bracket. So what can you do right now? Here are 3 practical steps. 1. Log into your My Social Security account at ssa.gov. Check your exact new benefit amount and projected payments. It takes 5 minutes and removes guesswork. 2. Review your Medicare options before premiums hit. Consider if a Medicare Advantage plan or supplemental policy could offset the Part B increase for your needs. Compare at medicare.gov. 3. If you're working or have higher income, talk to a tax pro about timing income or Roth conversions. Small moves now can avoid IRMAA surcharges or extra taxes on benefits 2 years from now. Do these 3 things, and you'll turn potential losses into real control. That's the full picture for Social Security in 2026. The raise is real, but so are the hidden costs. Knowledge is your best defense. If this helped you, hit like, subscribe, and turn on notifications. We drop clear, no-nonsense retirement updates every week. Comment below. What's your biggest worry for 2026? Medicare costs, taxes, or something else? I'll reply to as many as I can. Thanks for watching Retire Smart Guide. Let's make sure your retirement stays secure. See you in the next one.